Welcome to our half-year sales update. Today we want to give you the knowledge that you need to make the best of the market and make sure that whether you're buying or selling, you understand what's going on locally.
The big success story of the first half of the year has been the incredible sales to instructions rate. For every 10 houses we put onto the market, we've sold 8 of them. In a normal market, we'd expect to see that number around 6.5. This has been against a background of fierce competition amongst estate agents for the new instructions, leading to some properties being overpriced. And in North Leeds and York in particular, we've seen some really rapid growth in prices, with some extraordinary prices being achieved. We've a good number of properties where they've received between £10,000 and £40,000 over their asking price. Every market has had swift turnover, with our new Doncaster office and our Selby branch both enjoying strong sales results, but not seeing as much capital growth as North Leeds and York. One of the big challenges has been conveyancing. I speak with agencies up and down the UK, and they're all telling me the same thing. Solicitors are struggling to cope with the sharp increase in sales volumes. Like every business, firms of conveyancers have cut their cloth to reflect the new normal of lower volumes of housing transactions. The volumes of sales have been increasing sharply, and unfortunately, solicitors have been really struggling to cope with capacity. On a personal note, select your solicitor carefully. Don't be tempted by seemingly cheap quote from Conveyancers R Us from the internet, because when you are trying to complete on one of the biggest transactions of your life, you want someone you can rely on to be representing your interests. Take a recommendation. We only partner with firms who offer great service. If there's a problem, we can pick up the phone and we can sort it out quickly.
So moving on to MMR, you may have heard of the Mortgage Market Review, which took effect from the end of April 2014. Now basically, what it's meant is that mortgage lenders have to take much greater account of people's ability to repay the debt than they did beforehand. A lot of lenders simply used income multiples, so they would lend you 3, 4 or 5 times your annual income. Now it makes a lot of sense really, because if like me you have 5 children, your outgoings are considerably higher than someone who has no dependents. The problem is a sudden change of rules and systems for all of the bank's staff has led to an unbelievable crash in service standards. Now this means that our brokers from Preston and Baker Financial Services have been struggling to get in touch with lenders, who are now asking for all sorts of bits of weird and wonderful information that were not required previously. So in terms of expectations for a mortgage offer, my brokers are telling me that you now are looking at a good few weeks, whereas previously 10 days might have been sufficient. In terms of advice, you must see an independent broker rather than your bank, because tightened criteria means that only a broker has got access to the majority of the market, and only a broker can have got you the chance of getting the very best deal. Now that applies to remortgages too, and we expect the second half of the year to pick up a lot for remortgages as clients seek to fix their rate before the anticipated rates rise takes effect at the end of the year. Now any one of our branches has a broker in it who will come and give you professional advice. So thanks very much for watching, and I look forward to catching up with you at our next Sales Market Update.